Hey crypto fans, welcome to our guide on the new IRS crypto tax rules. If you're into digital assets, it is important to know this is crucial information. Big changes are coming from the IRS and you don't want to be caught off guard. These changes will impact how you report your crypto transactions and could affect your tax liabilities. But first, let me introduce myself. I am Mark with Crypto for Seniors, where curiosity evolves into knowledge. Now, I wanted to be sure you understand, nothing contained in this video, my YouTube channel, or on my website is considered financial information. This is for entertainment and education only. Please seek help from a financial professional. Now back to the video. The Treasury and IRS have released final tax reporting rules for digital asset brokers. This is a significant step in regulating the crypto market and ensuring compliance. Personally, I believe we need some regulation with issues like FTX and others. However, I don't believe our government should control, only protect digital assets and the decentralized systems. Starting in 2026, yearly reporting phases in. This means that every year, brokers will need to report detailed information about your digital asset transactions. By 2025, brokers will report gross proceeds from sales. This will be essential for tracking your crypto transactions and ensuring accurate tax reporting. In 2027, they'll include cost basis for certain sales from 2026. This means that brokers will need to provide detailed information about the purchase price of digital assets, which will help in calculating capital gains or losses. This totally makes sense, and clearly they need this information. IRS Commissioner Danny Werfel says these rules ensure digital assets aren't used to hide taxable income. The goal is to bring more transparency and accountability to the crypto market. It's all part of a larger effort to improve tax compliance. The IRS is working to close the tax gap and ensure that all income, including from digital assets, is reported accurately. So what does this mean for you? If you're a crypto investor or trader, you'll need to be more diligent about tracking your transactions and reporting them correctly. By the end of 2024, assign a basis for each of your crypto wallets. This means you'll need to determine the purchase price of each digital asset you own. If you don't, the IRS will consider your basis as zero, potentially increasing your taxable profits. This could result in higher taxes owed, so it's crucial to get this right. Remember, 2024 is crucial for proper reporting. Make sure you have all your records in order and understand the new requirements. Collect your crypto data and report accurately. This includes keeping track of all your transactions, including purchases, sales, and transfers. You can use a host of different tax software like Coinly, Zenledger, or many others. Stay informed, stay compliant, and keep your crypto investments on track. Now let's dive deeper into each of these changes and what they mean for you. First, let's talk about the new reporting requirements for brokers. Starting in 2025, brokers will need to report gross proceeds from sales. This form will be used to track the total amount of money received from selling digital assets. Previously, there was no standardized form for reporting crypto transactions, which made it difficult for the IRS to track and verify income. The new form aims to address this issue by providing a consistent and comprehensive reporting method. IRS Commissioner Danny Werfel has emphasized the importance of these new rules in ensuring tax compliance. He stated that the goal is to prevent digital assets from being used to hide taxable income and to bring more transparency to the market. Improving tax compliance is not just about collecting more revenue. It's also about creating a fair and transparent system for all taxpayers. By ensuring that everyone pays their fair share, the IRS aims to reduce the tax gap and promote economic stability. So, what steps can you take to ensure you're compliant with the new rules? First, make sure you have a clear understanding of the reporting requirements and deadlines. The IRS has provided detailed guidance on their website, so take the time to review it. Next, keep detailed records of all your crypto transactions. This includes not just purchases and sales, but also transfers between wallets and any other transactions that could affect your tax liability. There are several software tools available that can help you track and organize your crypto transactions. These tools can make it easier to calculate your cost basis and ensure accurate reporting. The price scales to the number of transactions. If you are a miner, you should adjust your payouts to one larger than to use each micro payout. If you don't, each micropayment will cost and increase the price of the software. Consider consulting with a financial advisor or tax professional who has experience with digital assets. They can provide valuable guidance and help you navigate the complexities of the new tax rules. A financial advisor can also help you develop a tax strategy that minimizes your liabilities and ensures compliance with the new rules. This can be especially important if you have a large or complex portfolio of digital assets. New tax laws are here for IRAs and Roth IRAs, so using a professional with all of the changes in 2024 should be a priority. Proper tax reporting not only helps you avoid penalties and audits, but it also provides peace of mind. Knowing that your taxes are in order allows you to focus on your investments and other financial goals. Staying informed and proactive is key to managing your crypto investments successfully. By understanding the new IRS rules and taking the necessary steps to comply, you can keep your investments on track and avoid any surprises at tax time. Remember to set reminders for important tax deadlines. Missing a deadline can result in penalties and interest, so it's crucial to stay on top of your reporting obligations. When it comes time to submit your tax forms, make sure you double-check all the information for accuracy. Errors or omissions can lead to delays and potential penalties. The IRS offers several options for submitting your tax forms, including online submission through their website. This can be a convenient and efficient way to ensure your forms are received on time. If you have any questions or need assistance, the IRS has resources available to help. You can visit their website, call their helpline, or visit a local IRS office for support. Stay informed, stay compliant, and keep your crypto investments on track. Thank you for watching our in-depth guide on the new IRS crypto tax rules. We hope this information helps you navigate the changes and stay ahead of the game.